Click the bell icon to get latest videos from Ekeeda.
Hello friends, let us discuss one question where we are required to calculate working capital and we have information of gross profit ratio in the question. With the help of this gross profit ratio, we are required to calculate cost of sales, cost of goods sold. Let us read question. Miss Lovely wants to start a new trading business and provides you with following information. Projected annual sales 15 lakhs. Expects that sales and purchases will evenly spread throughout the year. Average gross profit to sales 20%. Average stock holding in terms of sales requirement 1 month. Average credit period allowed to debtors 2 months. Average credit period allowed by creditors 1 month. 25% of sales for cash and balance on credit. Cash on hand estimated at rupees 17,000. You are required to estimate working capital. Here average stock holding in terms of sales requirement 1 month, this will be part of current asset. Average credit period allowed to debtors 2 months, this will be part of current asset. Average credit period allowed by creditors, this will be part of current liabilities. Cash on hand estimated 17,000, this will be part of current asset. We have details given by the trader starting a new business. So information given in the question is projected, estimated. Based on this, we are required to calculate estimated working capital. Here we have information of annual sales 15 lakhs. Rate of gross profit is 20% on sales, that is 20% on 15 lakhs, that is rupees 3 lakhs. So 12 lakh becomes the amount of cost of goods sold. It is clearly given in the question that sales and purchases arise evenly throughout the year. Therefore, we can calculate average stock hold by the business based on this cost of goods sold. There are 12 months in a year. Accordingly, it will be for 1 month stock will be always there in hand. Cost of goods sold 12 lakh, 1 month, therefore 1 by 12. Amount we get 1 lakh. Average credit period allowed to debtors is 2 months. And here they say 25% of sales is for cash. So balance on credit means 75% sales is on credit. Total projected sales is given in the question 15 lakhs. Projected sales 15 lakhs. Credit sales 75%. Period divided by 12. 2 months credit, therefore 2 by 12. So debtors will be 1,87,500. Average credit period allowed by creditors is 1 month. Cost of goods sold is 12 lakh. It will be equal to cost of purchases. 1 month purchases will be on credit. So creditors also we get here 1 lakh. Statement of estimated working capital. First, we are required to include current assets. Then first we'll have stock of goods, that is inventories. As per working note number 1, it is 1 lakh. Next, we'll require to record debtors, that is at sale price. As per working note number 2, we have calculated debtors 1,87,500. Cash on hand estimated 17,000. It will be part of current asset. So total current assets we got 3,04,500, or it is called as gross working capital. Less current liabilities. We have calculated creditors as per working note number 3, rupees 1 lakh. Three lakh 4,500 minus 1 lakh. 2,04,500. This is the amount of net working capital required. Estimated working capital 2,04,500. In this video, we have understood how to calculate estimated working capital when projected sales are given and gross profit ratio is given. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.